Welcome back. You're watching Market Pulse. Now, despite the popular belief that demonetization will hit the real estate sector hard, realtors body CREDAI feels that there is no further scope for correction in terms of where housing prices are concerned in the primary market post demonetization. In fact, let's understand their reason for the same with Getamber Anand, who's the president at CREDAI. Good morning, good afternoon, Mr. Anand. Now, looking at the kind of slowdown that we have been seeing, if you talk about where the construction sector is concerned, cost shortage as well in the system. If I see your statement of an expectation of a 20% upside in the real estate prices, it definitely surprises us. Now, what is the underlying reason behind such an optimistic expectation?
So let's first come back to the effect of demonetization on the organized real estate space, where most of the developers were catering to the primary market. What was happening is, when we launched a project, we would initially sell to the end users as well as a mix of investors. And these investors had no compulsion to stay on throughout the entire life of the project. They would exit, leverage a bit or maybe not leverage, but they would exit the minute they saw a small upside on their investment. They would undercut the prices of the real estate developer, and they would look at exiting the project with a small profit, which mostly was a cash transaction. After demonetization, and they were always catering to an end user, because the end user, if our price was X, after about a year after construction had begun, the investor was selling at X minus whatever, as long as he was making some money. And that money he made was not taxable, because mostly it was a cash profit that he was doing. Now, after post-demonetization, this is going to stop, and that end user who our investor was catering to will again come back to the primary real estate developer and take from him a full check deal. Probably he'll go for a home loan and leverage, as was being done by other end users. And this will see a slight uptake in the real estate space, whereas the primary real estate developers are concerned.
So, is it that the demand in terms of, where Hyderabad, Bangalore and Bombay are concerned is more resilient compared to other top cities as well?
No, not at all, because I'll tell you this, when we talk about real estate, mostly it does refer to these 7-8 cities, that some of which you mentioned, and all over here, I'll tell you this. You see, whether it be the salaried class or it be the self-employed class, everybody is very, very attracted to taking a home loan. In fact, if you speak to the PNB housing people, I think 53% of their entire portfolio is being given to self-employed people. So it is not just the salaried class which will buy apartments. It is across the board people, even the youngsters or the new generation of business people, self-employed people, all of them are very, very driven to do a very above board deal with a full check payment. They would love to take a home loan, because the gross cost of a home loan really drops after you take your income tax deduction for interest paid on the home loan. So it is not true only for the salaried class. I would say it is true for all home buyers, and even for self-employed investors, because these people too can leverage their investment, and like I said, hold on for a long-term capital gain and pay a very reasonable amount of tax and make profit.
But Mr. Anand, I have my doubts over the investment attractiveness as well, because your argument is completely based on capital gains perspective, and on rental yields per se. Bond yields provide more returns than rental yields on current housing price. Capital gains per se depends on the transactional demand. What are your thoughts on the same?
You see, you must understand, I agree with the fact, the first fact you made, that the yield on the bonds is much higher than the yield on real estate rentals. And this is so because, you see, as a society, we Indians are more inclined to have a house of our own rather than rent a house. So therefore, there was an Ambit report about 2 years or 3 years ago, which said that real estate prices will fall by 50% because the rental yields are not in tandem with the capital values of real estate. But that never happened, and it will never happen. Like I said, that is so because as Indians, we all like to own a house. And the aspiration is that we should own a house in a good location. Now, the question is affordability. And this affordability, I know that the government is seriously thinking of enabling the buyer, the home buyer, to actually have access to cheaper capital to buy the house, maybe a bigger house that he aspires for. Rental housing is being pushed, but like I said, the philosophy, the DNA of the Indian is to own a house. Especially, we've seen young buyers as young as 26 who actually, rather than renting, and we cater to a lot of salaried people. As soon as they become eligible for a home loan of a sizable amount at age 26 to 30, the first thing they want to do is buy a house rather than rent it. And I have spoken to some of them. They say, the thing is that this is the basic security that we need. This is what we've been brought up to believe, that you must have a house of your own. So we cannot treat ourselves as Americans or as the English. Over here, our DNA says that the house you live in must be your own. So that is a very, very big factor that will drive real estate in this country always.
So is it that you see a price increase across categories? I'm talking about where residential, commercial, as well as affordable housing is concerned. And do you believe that real estate industry could actually see an increase in the margins, or all increase would largely go in meeting the increase in terms of where costs are concerned?
No, see, I am bullish. So when we say that there will be a 20% increase, understand this, that part of that increase is a compulsion because of rising cost in the product. Because like you very rightly said, raw material and input costs are rising. Not only that, compliances being, a part of the regulatory act, every real estate developer will have to have a separate department in his organization to actually make sure that he is compliant. All these things will be a part of that 20% increase. So I am not saying that the 20% is an increase in bottom line. There is a part of this 20% will cover the increase in cost, and a part of this 20% will be actually an increase in bottom line because of short supply. And this will be across, but office space is something which is working more on a rental model, retail and office, and this will be driven by REIT. Now the REIT itself is a very big attractive change that has come into the market for commercial office and for retail space. So I am saying that the margin per se in the residential space will be increasing a bit, but in commercial spaces, yes, the input costs will be going up, but your lease rentals may go up marginally, all depending again on supply, because real estate is just supply and demand. So if the supply is short in commercial and retail space, yes, you will see rentals also going up in certain locations. These things cannot be generalized as a whole. It is very location specific, project specific, product specific.
All right, Mr. Anand, thank you for speaking to BTVi and sharing your views in terms of where demonetization is concerned. So a key takeaway coming in here that CREDAI is expecting a 20% increase in terms of where housing prices are concerned. So that's a very different view that we have been picking up, because the major impact was expected was a 25 to 30% decline in terms of where housing prices are concerned. But this is a complete inverse opinion from CREDAI, coming in with a 20% increase that can be expected in terms of where prices are concerned. In fact, with that, it's a wrap on this edition of Market Pulse. Thank you so much for watching.